Look like you've been working harder than a Doge out here. This one's on the house. It looks like you could use it. So, why the long face?
Man, I tell you what, I'm having trouble managing all the infrastructure platforms and containers needed to run our company's hybrid cloud systems. It's just driving me up the wall.
Sounds like you got yourself a bit of cloud trouble.
I really wish there was just an easier way to map all the dependencies going on, figuring out the bottlenecks in our application, you know what I mean?
Well, good news for you, McCree. DataDog is here. Hope you enjoyed that silly little intro, but today's video we're going to be talking about DataDog. I've been hearing about DataDog for a few months now. Didn't really know what it is, and probably still don't have the best idea of what it is. But because of that, I think there might be a little bit of an opportunity here, looking especially at the long term. It's just one of those companies that is kind of maybe too advanced for the average Joe to get their head around, thus keeping them from investing in it. It's never going to be one of those big, huge, sexy, slick stocks that everybody's just like automatically investing in, like Apple or something like that. So what DataDog did is they came along to companies. Generally, companies have a bunch of different software things that are kind of put together by their own teams to monitor various different parts of the network for security or uptime, downtime kind of things. Also little applications that are used daily for performing the company's operation. And oftentimes when you have all these different softwares, they don't communicate well together. Sometimes they were made in different eras or made by very different teams, so they weren't meant to kind of communicate with each other. And first of all, that makes it hard to manage them and makes it hard to solve problems. But secondly, when developers or operations people need to look at how do we improve our systems, how do we iron out bottlenecks or things like that, taking information from all these different systems that don't communicate well and presenting that to the higher ups is like really hard. And so DataDog has put together kind of a suite of different software that helps you not only monitor these things in a way that's really clean and understandable and visual, but also a way that allows development teams to say, hey boss, we need more money to do A, B, and C. Check it out, this is what's happening in our systems. And so it becomes much easier to manage and oversee all these different things that are going on in your company's network, even remotely, to find problems, to find security issues. And a lot of companies, as I mentioned in the Microsoft video, a lot more companies are starting to switch over to hybrid cloud systems, which means they have their own infrastructure on site, but they're also starting to get ready for the next generation and get things up on clouds so that they're accessible all over the world. And so managing all these different things is like mind-bendingly complicated. DataDog allows smaller companies to get a really good grasp of what's going on in all these different systems. And then it also notifies you when it finds a problem through like email, Slack, PagerDuty, or things like that. And the reason I wanted to look into DataDog a little bit more, I found these figures. DataDog's only been public since September, but I found these stats for the 6 months ended June 30th, 2020, and it looks like the revenues have increased 77% year over year to 271 million. Net income last year was negative 13.4 million, whereas this year it was 6.8 million. The North American segment has increased sales from 62 million up to 205 million, while the international segment has increased 3x from 21 million to 65 million. Net income has also increased from about $500,000 up to almost 3 million. And their basic earnings per share has increased from negative 5 cents to positive 2 cents. So seeing these figures got me a little bit interested. I know that DataDog IPO'd at around 40 bucks. They've gone as high as like 95 bucks. They've gone as low as I think 25-ish bucks. Right now they're kind of like 80, 85, depending on when you see this video and when I actually finish editing it. But we saw a general dip in the SaaS, or software as a service, a couple of weeks ago, and DataDog was also in that drop. It's still up towards its highs, but looking into the stock, I kind of got interested because I was thinking, with everything going on and all these transitions to cloud technology, as well as the pandemic impacting all these larger companies, medium-sized companies, and smaller companies, to rush and try to get online, to try and get their systems kind of smoother and easier and more optimized. Seems like it's kind of a really good opportunity for DataDog and a bunch of their competitors in the same sector, but particularly DataDog seems to be doing a good job. DataDog's business model is a land and expand model. So that basically means once they get into a company, they'll offer them one service that solves a bunch of their problems. And then the kind of like network admin guys and developer guys are kind of like, wow, this is really handy. This has made my life a lot easier. And then DataDog comes in and they're like, hey, we could solve those other problems with this part of the software, you know, and then it kind of connects on to the existing one, solves a bunch more problems, and then more and more and more add-ons. And so last year they ended up with a customer retention rate of 130%. And you're like, dude, how do you retain more than 100% of your clients? And it's because with existing clients, they've added on more and more services. And it seems the client satisfaction rate is also through the roof. They announced that their revenue growth was 68% year over year, which is another really encouraging sign. Another really neat fact that they shared is that they basically doubled the number of clients who are paying more than $100,000 per year in annual recurring revenues, ARR. You'll see that in reports sometimes. So basically every year, the number of people paying them $100,000 or more has doubled from 500-ish to more than 1,000. So going forward, they're gonna have more than 1,000 companies paying them more than $100,000 per year recurring for a very long time. Those types of sales strategies and growth tactics are what you really like to see in a company as an investor. We did a silly little skit at the beginning of this video, and I tried to figure out a way to put these following kind of landmarks in it, but it was gonna just be too kind of, you know. A couple more milestones that they highlighted in their second quarter report are they achieved FedRAMP authorization, which means the government is now going to allow DataDog to be used in government settings, basically allowing the government to get more efficient, less wasteful, maybe probably, hopefully faster. And we all know that our government can use that. Another highlight in the second quarter was that they acquired a company called Undefined Labs, which is a provider of observability for dev and test workflows. This allows DataDog's systems to be injected much earlier in the system. Previously, you had to wait kind of until you got to being done your projects, and then DataDog could connect into it. But now you can inject it at a much earlier stage, thus enabling you to find problems before you even reach production. DataDog also just launched general availability for private locations for synthetic monitoring. This enables development and operations teams to monitor their companies like private apps that you can normally only access from an Ethernet, access from any location, access remotely. Another really big highlight they had from the second quarter was Amazon offers all these cloud services, and there are a bunch of companies from all over the world hosting their stuff on their clouds. DataDog services allow you to more carefully monitor what's happening on your local systems and servers as well as on Amazon, and it's all integrated very slickly and smoothly. So Amazon's saying, hey guys, DataDog's dope, and you know what happens when you get Amazon's recommendations, probably more people are gonna start using you. So that's all great news for DataDog in the last quarter especially, but there's also a few different weak points I wanted to take a look at. The first being that their PE ratio is almost over 9,000. So in relation to their stock price, their amount of sales is like measly. And so you see kind of a trend that's going on all over the world right now, like all these big name stocks, Amazon, Apple, Tesla, blah, 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 you name it. Everybody is like super overpriced. And I was thinking DataDog's probably really overpriced too. But I spent some time talking to people involved with development and system admin and things like that. And it sounds like a lot of people are pretty positive about it. And it also sounds like there's still a lot of room to grow into the future. They also have really high gross margins, but at the same time, their net income is kind of coming in at like almost zero-ish. What's the deal with that? Taking a closer look, it looks like they're spending a lot on admin as well as R&D at this point. They have a heavy emphasis on research and development and selling and admin, which is probably one of the reasons they're growing quickly. And I think small tech companies who are providing really big valuable services for this with really high customer retention need to be throwing a lot of their income back into sales and back into R&D to continue improving their products. I think it's really easy for companies to start making some money and then just kind of sit back on their laurels and be like, yeah, we're doing all right, you know, but it seems like DataDog's mindset is very much like, we're gonna keep getting better. We're gonna keep providing really awesome solutions for our customers to keep them satisfied. So I think that kind of explains why this net income number is so low. Let's take a look at the third quarter expectations as well. They're expecting revenue between 143 and 145 million. They're also expecting non-GAAP operating loss between -1 and $1 million, as well as non-GAAP net income per share between 0 and 1 cent. So you might be wondering what the difference is between GAAP numbers and non-GAAP numbers. Basically, GAAP, generally accepted accounting practices, are like strict rules that you have to follow when you're declaring, you know, we made this much money. Our earnings per share is this. sometimes companies will report things in non-GAAP figures, which is basically like, oh, you know, we used a bunch of our money to like build that factory, but we only do that once. So we're gonna like play around with the numbers and present kind of what we think is a more accurate figure of how well we did this quarter. So when you're looking at non-GAAP figures, it's helpful to get an idea of what the management wants you to think, but there are also times where management can be a little bit tricky and a little bit shady and not really present the whole picture to you. I feel like that's not the case right now with DataDog. And so there you have it. That's kind of a brief outlook at DataDog. I learned a lot doing this review, but I also learned how much I don't know about this whole realm. For me, like I spent, I don't know, probably 10 or 15 hours looking into this stuff, but I think the average Joe investor would only invest in DataDog if they're like, hey, I heard it's awesome, I heard it's hot, I'm gonna put in my money kind of thing. So I think it won't be able to be one of those stocks where it's like everybody understands it and everybody loves it and everybody just thinks it's the hottest thing ever. You know, new Apple iPhone comes out, new iPhone, new iPhone, new iPhone. And investors are thinking, oh, you got a new iPhone and that made me this much money kind of thing, you know? But with DataDog, it's so amorphous for so many people that I think it won't easily become one of those super sexy overrated stocks. Yes, the PE ratio is very high right now. And yes, I'm going to start buying. I actually started to buy a little while ago and just gonna be dollar cost averaging in slowly. I don't think this is gonna be one of those things where it's like, you know, 90% of my portfolio or something like that. But I think over the years, with the management's really strong focus on commitment to make their clients really happy and solving real problems, while at the same time for clients, yeah, they're spending a lot of money on DataDogs, but they're also going to be saving so much more money because they don't have to hire so many redundant staff now. So for the client, it's stupid not to get DataDog. For DataDog, they're doing a really good job providing these solutions. So I think DataDog's kind of in a cool situation where it's going to be growing that ARR, as I mentioned earlier, annual recurring revenue over the years and years, you know, and so kind of picking up a share here and there over a few years. I hope to be kind of built up to a more significant position, but that's kind of my recommendation about DataDog. I would really like to hear what you think. I really want to hear your thoughts. Are you going to be dipping into it? Are you going to be jumping into it? Or are you staying away right now because the PE ratios are so high and the market's so hot? I'd like to hear your thoughts. Looking forward to seeing you guys in the comments soon. Thank you very much.